Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. Previously on Audacious Money Witch, as you might remember, I sold my RiVN shares when Volkswagen lent a helping hand to RiVN in July. Later I put that money into more Tesla stock, so why would I want to buy RiVN stock back again? In this video, I want to explain what happened in RiVN that tanked the company's stock price into my buy range again. Is it actually a wise decision this time to jump back into RiVN stock right now? Why I want to load up before Tesla's Robotaxi event, but would I? I want to discuss the whole automotive market as well as the EV slowdown and what makes RiVN stand out and live on like the next Tesla. Also, why did the stock market go up on Friday despite the Fed liquidity having been going down? First, let's talk about the macro. Why did the market go up while the Fed liquidity is down, as you can see? It's all because of the jobs report. At first glance, the surge in the jobs, according to both household and establishment surveys, indicated a strong rebound from recent monthly weakness, which coupled with the drop in unemployment rate and upward historical revisions suggested that much of a recent labor market weakness may have been transitory. The jump in wage growth, which strongly hinted that inflation is also back, especially now that oil is once again surging and TLT is losing. Now let's focus on the parts of the jobs report which the BLS has traditionally used to mask headline weakness. A political imperative for the highly politicized agency tasked with making the economy appear stronger than it was exactly 1 month ahead of election. The answer was in the number of government workers. Why jam a record number of government workers in the September payrolls report? 2 reasons. Unemployment rate drops to 4.1% instead of rising to 4.5%, assuring the SOM rule is indeed triggered and the U.S. is officially in a recession, and also prevents the market from crashing. The BLS may have done everything it could to put lipstick on the jobs market, but it forgot to change on data set. The number of people who need more than one job to make ends meet just hit a new all-time high as well. So we are not well economically, as we can see from the automotive market. We can see from Ford stock in a downtrend, Chrysler parent Stellantis in a downtrend, Toyota in a downtrend, Volkswagen in a downtrend. Big China problems for Volkswagen. Why am I talking about Volkswagen? Well, RiVN is tied with Volkswagen now at this point. Volkswagen has weak presence in the US market, combined with the struggles in China and Europe, leaves the company in a precarious position. Germany's Volkswagen cut its full-year outlook for sales and deliveries Friday, citing a challenging market environment. Volkswagen said earlier this month that around 2 million fewer cars are being sold in Europe per year compared with pre-2020 levels. Volkswagen itself is selling 500,000 fewer cars annually in the region, the equivalent of around 2 car plants. Right now, China is basically the worst of both worlds when it comes to foreign automakers, as it has a fiercely competitive EV market and a sluggish economy. All the manufacturers, Western manufacturers, and Japanese and even South Koreans are now facing the fact that after China being an incredibly profitable market, that the homegrown EV companies are literally pushing Volkswagen, Toyota, and Honda's profit back into the ocean. To better explain just how advanced China's EV market is, consider that in July, over 51% of new passenger car sales were EVs in China, over 5 times the market share that EVs account for in the US. New vehicle sales
You've got companies like NIO, companies like Lishan, these Chinese NEV makers that are frankly as good, if not better than Tesla right now.
I know people will say Americans won't buy Chinese. You know what? You ask somebody, do you want to pay $9,000 for an SUV, or do you want to pay $19,000 or $20,000 for an SUV? No contest.
And this,
causing some concern to the likes of Elon Musk and Tesla and a number of other car makers.
Further, BYD's cheapest vehicle, the Seagull, could absorb 100% U.S. tariffs and still undercut the industry with a $25,000 vehicle. Imagine trying to fight for market shares in a booming EV market without tariffs to help offset Chinese price advantages. That's why many foreign automakers are absolutely struggling with the sales decline and excess production capacity. So that means Volkswagen has a problem in China. The second largest car market, which is in the United States, nobody buys a Volkswagen. A Volkswagen is like an Alfa Romeo. Volkswagen sells less cars in the US than Subaru. What it means is that Volkswagen is also trapped in Europe. Volkswagen is currently considering the closure of several plants in Germany, marking a significant shift for the company as it has never closed a facility in its home country in its 87-year history. It is exploring this option as part of a strategy to achieve cost reductions amounting to 10 billion euros by 2026 in response to increasing competition and a shrinking market for traditional vehicles. And this is where our friends at RiVN come in, because the pledge initially from Volkswagen was over a period of time for $5 billion of funding.
Volkswagen will be investing $5 billion in RiVN.
Volkswagen.
But if they're having to close plants and they're cash tight on production in Europe, do you think they're going to fully fund RiVN when their basic problem is electric vehicles? I think that funding could be in big trouble. RiVN Automotive shares sank Friday as the EV maker missed third quarter delivery estimates and slashed its full year production outlook because of difficulties in getting a part. RiVN said it built 13,157 EVs in the quarter and delivered 10,018. Analysts were looking for 12,080 deliveries. RiVN stock extended a recent slide that has fallen from levels seen this summer following an investment from Volkswagen. Shares of RiVN Automotive have lost nearly half of their value in 2024. RiVN cut its 2024 production estimate because of a supply shortage of a component used to build its R1S SUV and RCV commercial van. It added that the issue began in the third quarter and has become more acute in recent weeks and continues. A lot of people are feeling negative about this news right now. They are calling RiVN a terrible business, which is going to run out of cash in the next 6 months. For a long-term investor, that will be a short-term and painful disappointment. But what if RiVN finds another partner like Volkswagen, which surely in the longer term, that is a good thing as they can't make them fast enough to fill the order book. Once that is sorted, the stock could go up. RiVN now anticipates it will manufacture 47,000 to 49,000 EVs this year, down from its previous forecast of 57,000. Analyst estimates were for 54,910, which leads me to talk about the revenue growth rate of this company. Due to this bottleneck component or lack of a Georgia factory, RiVN can't make more EVs fast enough, so previously we had a revenue growth rate of more than 80% per quarter. In Q2, RiVN reported a revenue growth rate of 3%. That's not all. On the bottom line, it lost more money than last year as well. It spent more money on stock-based compensation. The book value per share is also going lower year over year. However, other than the scary hard factual numbers, the story RJ Scrinch told us was pleasant. RJ said the second quarter has been a defining one for RiVN. We have demonstrated strong execution during the quarter with the plant retooling upgrade and launch of second-generation R1 vehicles. The changes we made to the R1 platform have allowed us to reduce material and manufacturing cost, while simultaneously improving performance and capabilities. As a testament to our industry-leading technology stack, we also recently announced our proposed JV with Volkswagen.
Volkswagen.
The technical work streams to prepare the integration of RiVN electrical architecture and software technology stack into Volkswagen products are moving along very well. And we expect to close the joint venture in the fourth quarter of this year. The output from our joint venture will see RiVN's technology in vehicles all around the world, helping to create more consumer choice and speed up the transition away from fossil fuels. Can RiVN achieve long-term profitability? This is the question you need to ask yourself if you decide to buy RiVN stock. Lastly, Jim Cramer believes RiVN Automotive is a strong long-term investment because its products are impressive.
I think Rivian, the smaller EV that's most likely to become the bankable, viable one, is terrific, but its stock is still down 35% year to date. Didn't help that the company reported mixed fourth quarter production and deliveries results at the beginning of the month. So the question is, do you treat this weakness as a buying opportunity and a high-quality operator, or is it time to write off the whole electric vehicle cohort? For now, we can only try to stay close to the story and a vehicle that does still turn a lot of heads when it's on the road. It doesn't sound like it's a demand problem. It sounds like it's a part problem. The reason I point that out is because the demand problem at Ford is bad, demand problem EV, GM, no, I'm talking about EV, not hybrid. And David, EVs everywhere are under this turmoil. I mean, Europe just put through you got these tariffs.
Tariffs on the Chinese EVs, correct?
I want to believe that Rivian's right, because I think Rivian's terrific. Remember, they got the tie with Amazon. I want to believe that they're right, that it's a part, not demand. But I don't know, David. This sector away from Tesla is just sheer hell right now.
Let me know what you think in the comments below.